Good afternoon, everyone. Requesting everyone to please assemble and take their seats.
Hi, Swati, we are starting. Hello. Can you, hope you're able to hear us, Swati.
Maybe I can hear you. Can you hear me?
Thank you so much.
Good afternoon, everyone. So we have finally reached the end of the event now with the last session coming up now. Welcome, we very warmly welcome you all to the last session of today, which is basically on the finance. We'll be discussing on finance. And the session will basically discuss the how can we, unlock the financial sector and in the food loss and waste sector. Before I move on to the heart of the panel discussion, I would like to invite our moderator for today, Dr. Ruchika Singh, the Executive Program Director, Food, Land and Water, WRI India. Moving on to our panelists, esteemed panelists, Mr. Krishna Singh Rautela. He's working as Natural Resource and Agriculture Specialist in the Agriculture, Food, Nature and Rural Development Sector Group Team at ADB's Asian Development Bank's India Resident Mission. He's working on agriculture value chain development, farmer-producer organizations, digital agriculture, climate change, coastal protection, irrigation and ecotourism initiatives of ADB. Moving on to our second panelist for today, Ms. Nidhi Pant. She's the co-founder of Science for Society, S4S Technologies. Nidhi works at the intersection of agriculture, gender, energy access, and financial inclusion. At S4S, she leads finance and partnerships. S4S Technologies basically provides smallholder farmers with solar-powered food preservation and processing capabilities at the farm gate. Our third panelist for today is Mr. Santosh Vatpade. He is the Chief Financial Officer at Sahdri Farms. Sahdri is leading fruit and vegetable export company from India, servicing over 18,000 registered farmers that cover around 31,000 acres and nine crops. He has more than 14 years of experience working in the field of account and taxation, treasury, corporate finance, and banking. Our fifth panelist for today is Ms. Starleen Sharma, founding partner Green Earth. Starleen is an experienced investor and two-time entrepreneur who has scaled organizations with global reach in both India and US. She leverages global capital markets knowledge with experience in scaling businesses to deliver climate results. Our fifth panelist is Ms. Swati Agarwal, who will be joining us online. Hi, Swati, I can see you. She's the director, Climate, Asia Philanthropy Circle. Swati has been in this sector for over a decade and has been shaping strategies for philanthropies in complex settings and across interdisciplinary areas connected to climate change, including food loss and waste. And the final panelist for today, Dr. Vadivel. He is currently posted in State Projects Department, NABARD, head office as general manager. He has worked in Uttar Pradesh and Assam regional offices of NABARD in departments where refinance and direct finance related products were handled. He is also vice president at zonal office, northeastern region of NABARD Consultancy Services for a period of almost 2 years. His areas of expertise are appraisal and monitoring of projects and is currently handling the food processing fund instituted by NABARD. Over to you, Ruchika.
Thanks, Nitya. And I'm delighted to have such a diverse panel to have a discussion on a very important topic when we are thinking how do we unlock finance for reducing food loss and food waste in India. And in the last 2 days, the discussion that we've been having on food loss and waste as a topic, finance actually came up in almost every session. And different facets of finance essentially also came up during the discussion, right? If we are thinking from, like if I talk about the morning session, when we are talking about the best way to aggregate smart solutions at the post-harvest level could be potentially through collective of farmers, through farmer-producer organizations. How does financing for that work? what kind of partnerships essentially can lead to financing, what kind of financing businesses, innovators who are working on this, they would need. It's patient capital, early stage businesses are also looking at, there's a lot more in terms of research, innovation that is needed. So they need finance to actually get some of that innovation in place. And this came up a lot, during the conversations as well. And the financing is not, one is about the innovation, and you need finance for the technological innovation, but sometimes it's also about building the capacity of the business itself. I mean, for the business to grow or a farmer producer organization to grow, that's also part of the ecosystem building and financing needed for efforts like that, so that it can function. The other sort of conversations that came up on financing were also in terms of there is some public funding that is available for food loss and waste. We had discussions yesterday, for instance, and the Ministry of Agriculture were here, that there are different sort of projects and schemes that are available. And in the discussion in the morning, in Maharashtra, some of the work that this happened, we heard briefly, and we'd love to hear more about that as well, Mr. Rautilla. In terms of public funding is available, but how do we converge? What's happening, what's not? Those are the sort of issues that came up a lot during our discussions. And while I think everyone sort of agreed that when we're thinking about scaling innovations on food loss and waste, there's different kind of financing or funding that is needed, and there's not too much enough. What it looked like, there isn't enough, and some of this is also, our learning from global analysis, etc. There's not enough funding that's coming to food loss and waste as a sector overall. Amount of philanthropic funding, or public or private. How do we sort of look at some of those? And if we don't have that funding, how would we sort of meeting the target under the SDG 12.3 itself becomes a critical sort of issue, right? How do we do that? What we need to think about different kind of financing instruments, which could help in actually supporting innovations that I just spoke about, which requires shifts in funding priorities. How do we look at the entire sort of issue? And we're hoping to cover some of those sort of diverse and complex issues in this discussion today. And I think everyone agreed. And in the last 2 days, one of the things that came out is, of course, food loss and waste. There are multiple benefits. One can, from climate, from livelihoods, jobs, nutrition perspective, but it's a complex issue. So how do we sort of, unlock more financing for a topic which is very important and requires diverse ecosystem and actors is critical. Which moves me to, and we'll probably go online first, Swati. Thanks for joining on this, and you're obviously a big supporter and very passionate about this topic, I know. So just from your sort of what's been your learning on funding food loss and waste work, overall, or what you've seen in the sector really, right? What's happening, and how can philanthropies help unlock more larger pools of finance for food system transformation? Because food loss and waste issue is not just about addressing the food supply chain, but it's really about fixing the food systems in some sense. So how do we look at this?
Thank you, Ruchika, and hi everyone. Unfortunately, I cannot be there in person, but very happy to be part of this panel and being able to share my thoughts with you. As Ruchika said, and I think we go back to Asia Philanthropy Circle is a relatively nascent and new role for me, but prior to this, I was with Oak Foundation, which is where we used to do a lot of work around food loss and food waste. And I think just going back to the point, looking at that not enough funding is flowing in this area, and naturally, and I think the core reason that we see for that not happening is because there's not enough data currently to support on two sides. One, either driving urgency towards the issue of food loss and food waste. Particularly if you look at the context in India when we started off on the food loss and food waste work about 2 years ago. Still I would say that the sector was looked at more from a siloed approach, wherein a lot more attention was still going towards waste management. And I would say that's very much still the case. But when we talk about the real issue and the interconnectedness of how food loss and waste really sits at the center of climate change, it sits at the center of nutrition, it sits at the center of health contexts or health burden for a community, or it sits at the center of many other socioeconomic challenges, I don't think we still, have enough, I would say, data to really drive that urgency on one part. The second is there is because of the lack of data in the sector, I would say um, the second part that it is not being able to drive is, sort of a clear pathway to what action may as well look like. And that goes back to the two cases again, because data is unreliable for one, and secondly, it's very fluid, right? So again, when we're trying to design business cases around opportunities in food loss and waste sector, there's a lot of risk entailed in that. Now, I think philanthropy as a as a key actor has a big role to play in this. One in maybe looking at how do we come together to drive that kind of shape a spotlight on an issue like food loss and waste. I mean, just going back to the initial conversations that we used to have in this sector, and I think in terms of priority within the climate, across the climate sectors, food loss and waste would almost be the last priority given, the different tiers of decarbonization sectors which are already, they're looking at large mitigation numbers. And that is largely because we again tend to look at food loss and waste as a silo, which only caters to the last mile, landfill and the waste management part of it. But we actually, if you look at it from the entire food systems perspective, it's really massive and it could drive a lot of co-benefits down the line. But I think we're really missing out on that point. So I think there's a lot of potential maybe for us to come together and really shine a spotlight in this space for one. And it is not only for India, right? And I think now really looking at region at a large. So many of the philanthropic families in Asia as well, while looking at what could be some of the priorities within the food system space, and they realized the first realization was that there is not even enough data, right, to even tell us what kind of prioritization may start to emerge, and which is where a group of philanthropic families, they came together to support the first food drawdown context for the region, which is now actually sort of started to bring forward some of the data, looking at food loss and waste as one of the core levers, even for the region at large, driving up to more than 500 million tons of carbon dioxide emissions per year, which is massive. But I think that the real challenge is that we hadn't had that so far. And which is where we were lacking on even driving the kind of philanthropic attention in that direction. So let me park there, and I can come back to more thoughts as we go along in this panel.
Thanks, thanks, Swati. I think very, very critical points, right? There's some funding flowing, and I think some of this came up in the last, the waste side of conversations that we've been doing in the last 2 days as well. Overall on waste, there's money, of course, flowing, but if we look at food waste specifically, much lesser focus. And the siloed approach, of course, one is within the, how the funding might be flowing, but also within we've talked about fragmented policies, etc., other ministries, no nodal agency, all of those also sort of sometimes become a barrier. So how do we sort of think about it, from a policy perspective? That also potentially is needed so that the financing can also flow better. So, and the two probably need to happen simultaneously. And data-driven approaches is, of course, very, very critical when we sort of think of that. Which brings me to, maybe Dr. Vadivel, coming to you first. From your sort of NABARD's sort of experience, what role does finance play in improving post-harvest infrastructure such as storage and processing? And if you could outline, some key credits, schemes and other initiatives that NABARD is already undertaking to support reduction of post-harvest losses.
Little bit of the context of post-harvest losses. See, when I was studying in college, at that point of time, it was told that post-harvest losses were to the tune of 30 to 40%. That is an approximation which happens, There is no data which supports that. Now what happens is Ministry of Food Processing Industries now regularly conducts this national level study on estimation of post-harvest losses. In fact, CIFED has conducted, Central Institute of Post-Harvest Engineering and Technology, Ludhiana has conducted this study in the year 2010 and 2015. Now the third study was conducted by NABARD Consultancy Services, and the report is available in the ministry's website from 2022. Now thing is that these post-harvest losses have come down over a period of time. Even if you take this 2010 report and 2022 report, which is recently available, it has come down. But whether it gives cushion to us that it has come down drastically, that I need not take action on it. Still the losses are considerable. For example, in case of cereals also, it is somewhere around 4 to 6%, and the losses are high in case of fruits and vegetables, which is hovering around 6 to 15%. So whatever the production which is happening in terms of fruit and vegetables, 15% goes lost, then it is a concern to us. So across the commodities, it is like this. So which is the commodity which has the least post-harvest loss is the milk. So most probably we may need to take a leaf from why this milk is having an maybe a 0.87%, whatever the statistics which says the post-harvest loss in case of milk is 0.87%, whereas in all other commodities it's higher. So what is the positiveness which I am taking from milk? Morning also a speaker was saying that we have a good value chain which is there in the cooperative sector, and in fact Amul is the strongest example of this. There, starting from the production, in the production level itself, what farmers has to do for the hygienic milking and how to collect the milk hygienically and how to store the milk hygienically at the village level cooperative societies itself, then it moves to the milk union, then moves to the Federation for Marketing. That entire value chain is getting captured. So this is one part of it. Now the level of processing also is a concern because across commodities it varies. If we see the warehouse capacity, current warehouse capacity, as per WDRA, the warehouse capacity gap, if I consider the food grain production to the tune of 330 million metric tons, the current warehouse capacity is to the tune of 230 million metric tons. So still there is a gap of 90 to 100 million metric tons approximately. So I have a potential. Now the question here is whether I have an adequate cold chain infrastructure in the country. In fact, after this National Horticulture Mission and other things, this horticulture production exceeded the food grain production. So now there is no latest study showing that how much is the requirement of a cold chain infrastructure in terms of ripening chambers, in terms of cold storages per se, in terms of integrated pack houses. But a large chunk of these infrastructure is still required to arrest this post-harvest losses. That is why most probably we are having a fruit and vegetables, the losses are higher because of the insufficient cold chain infrastructure. Now coming back to NABARD. NABARD supports this infrastructure for arresting the post-harvest losses through its different funds. In fact, Government of India in the year 2014-15 had created 2013-14 and 14-15. In each year, the fund corpus was 5,000 crore. So total of 10,000 crore was allocated to NABARD, where that fund is called as a warehouse infrastructure fund. So creating a storage infrastructure in the country, either in terms of godowns, that is a dry warehouse, and a cold storage, which is a wet warehouse. So we have created under this fund, now the total amount is committed as on date, and 14.5 million metric tons of storage capacity has been created under this fund. Now the operating fund is directly related to the food processing, and in fact that was also allocated in the year 2,000 crore corpus was allocated in the year 2014-15. This is basically for providing affordable credit to for establishment of designated food parks. Designated food parks are those food parks which are notified by the Ministry of Food Processing Industries from time to time, and this list is available in the website of Ministry of Food Processing Industries. And establishment of an individual food processing units in the designated food parks. Now the designated food parks constitute mega food parks and then agro-processing clusters. These are all the things which are, designated as designated food parks. Besides that, there are industrial estates or industrial areas which are identified by the state governments, and that is getting designated as a designated food park. Now I will not enter into the finer details of this. It will take a lot of time. So basically, through these funds, we do this. In fact, from 1996, NABARD has a Rural Infrastructure Development Fund, wherein also we support, wherein loan is provided to the state government. In fact, food processing fund, what happens is out of 2,000 crore, I would like to say, out of 2,000 crore, 1,127 crore is committed, which means still 820 crores is unutilized. So if an entrepreneurs are setting up units in the designated food parks, then still it is eligible for affordable credit, where the interest rate is somewhere in the range of 7.4 or 7. It varies from time to
Sure.
time.
Thanks. Thanks,
Thank you,
Dr.
Anish.
Vadivel. We'll come back to further discussion on this. But no, thanks for sharing that while the losses based on the ICIS effort and the later last NAPCON study might have come down, but there's still, at least on the fruits and vegetable side, there are a lot of losses. And how do we think about the right solutioning, and we can debate about that a little more. Cold chain or cold storage is a solution, but for which commodities, how does that work? Is the infrastructure ready for the entire supply chain, and how do we do that? Some of those questions can be further unpacked, but moving to Mr. Rautila first, I mean, I think ADB has, committed significant resources to improving post-harvest infrastructure through supporting farmer-producer organizations and value chain sort of operators in Maharashtra, as we heard a bit in the morning. But just, if you could unpack that a bit more in terms of the financial models that, are in play, and what are the learnings overall so far on this?
Good afternoon, everyone. So I'll just come back from where our philosophy with respect to agriculture financing is. So in India and across Asia also, we are looking at how farmers' income can be increased, how rural poverty can be addressed, how rural prosperity can be achieved. So that's the main goal first. So from that point of view, when we started looking at our Indian projects, so typically smallholder farmer, that was the first issue. Then how do you take care of that? Then became FPO as an issue. Then when you also looked at FPO, then FPO as an issue as to they are made, but they are not capable to do business. So that means their capital, their own internal capital to invest as well as do business. Both are an issue, and also capability of doing business. So these are a few things which we were initially working with, and overall our initial attempt was as to how private sector can come into this and how private sector financing can be done. So initially when we started in 2010 with a PPP kind of approach, thinking that we will have a private sector person come and he will invest and then he'll do the whole thing. Somehow that didn't work out because it was too ahead of its time, because first of all there has to be enough private sector capability and risk-taking capability to do that. So then we had done a grant project with Maharashtra, and under that we had formed 18 FPOs. And then we had understood exactly what goes through the FPO formation and their overall business capacity. We did a small primary processing kind of facility, then we did marketing, we did support for the credit for revolving credit, things like that. So from there this project came about, where we looked at overall Maharashtra being ahead in terms of having the production and also having access to market, but FPOs were not capable, they had an issue. Second is they didn't have enough infrastructure. So whenever we talk about now increasing farmer income, we look at more horticulture and high value horticulture in a way. That's again brings the perishability, as you mentioned. The perishability is one of the key things to address, and there you require the post-harvest infrastructure. And then we realized that there is not enough access to finance also to all the players. So on the FPO side, definitely there was an issue. Even the value chain operators were small and medium-sized enterprises. They had the capability to do more business, but they don't have the access to affordable finance. So finance is an issue where in India, we have finance available, but at the right part of the value chain, finance is an issue. So with that, this project we designed where we had one component totally devoted to FPO capacity building and the business and overall understanding of post-harvest management. So in many projects, what tends to happen, or schemes, what tends to happen is do a part of the value chain, right? But rest of it is left to the person or the entity or the stream to actually fend for themselves. So we said we should do end-to-end. So the post-harvest management, we did a study. We looked at which value chains are the ones where support is required. Currently, how much is the post-harvest loss? Now again, definitely the methodology has been based on the kind of interviews, understanding, but it's not a quantitative methodology. But still we had an understanding as to how much is the loss. So roughly 15 to 30% was initial understanding. We had selected roughly over 15 value chains. So within that, what we have said also is that the food loss as a quantity or percentage is one thing, but the quality loss, based on that, the value loss. Actually speaking, how much value you can generate by investing into this is something which we should look at, not just the percentage of food loss. So from that point of view, the next part of the project actually does support the FPOs and value chain operators both, value chain operators who are accessing their material directly from the farmers. So they're connecting with the farmers, so the kind of business capable organizations. We give them matching grants for the post-harvest management. And also, so in India right now, AIF and other schemes have been mentioned. Another finding is that those sizes which you currently support under those schemes are small. And if you really want to achieve scale, then you have to do a larger project. So our projects roughly support up to 6 crore, 60% of the project cost, so which is fairly good. So a 1,000-member FPO, can have capability. So right now, some projects are doing 20 metric ton per day, but also they're doing 200 metric ton per day also, depending on what kind of. So one is to give the matching grant. Second is to address this access to finance, but not just for the capital in a way, but working capital. So working capital is what we are focusing on. So these two elements overall are leading to first creation of infrastructure which will reduce the post-harvest loss. Second, also will increase the throughput from the system. So that means if somebody is handling today 10 metric ton, if he's able to handle 100 metric ton, so 10 times reduction in a way, that's what we have thought. So this is the current approach. Total $100 million is the loan in this project. Out of that, about $37 million is for the matching grant. About $40 million goes as the working capital. But that working capital, and this is available through the financial intermediaries. So we have onboarded Samunati Finance, Bank of India, Federal Bank as of now, and Napkinsan also, so Nabad is here. So we are trying to get these agencies, the ones to improve the outreach directly to farmers. So what it also would do is, it will help then sharpen the products to FPOs. Because right now, for example, you have a car loan, house loan, very clear, easy things to sell. But when it comes to financing or FPOs and VCOs, there's not an easy product availability. So this is what we have been able to do, that with Samunati, advantage is that NBFCs currently have 18% around that much is their cost. So with this financing, this is also another very interesting thing which government has accepted, which other governments, I don't know whether will do that or not. So ADV finance is a low-cost finance. It is provided to these financial intermediaries as repo -2. So currently almost 4.5% is the cost. So costs of funds for the NBFCs, when they are reduced, they are able to pass it on to FPOs much easily, and FPOs are able to also increase their overall credit from there. So this is the current model. Overall, I think we have been able to do roughly about 122 entities have taken FIL. More than roughly about 200 crores already been dispersed. So this is a revolving facility. The money comes back, will go back again. On the matching grant, roughly about 77 proposals have been done. Out of that, roughly about 260 crores is the matching grant. Total is about 460 crores is total financing. So it is bringing other financing also apart from the grant.
Leveraging some of that as well. Well, thanks for sharing that. I think how do you strengthen FPOs has been one of the, and getting financing for them was a critical question that keeps coming up. And it's good to know about, and sometimes the financing that's available for FPO is also not very affordable, just in terms of interest rates. And I think what you mentioned in terms of reducing that sort of the cost of, financing for the FPOs, et cetera, is definitely an innovation, but also outcome-based financing in a way that you talked about, right? I mean, there's a focus more on farmer income, what it can really leverage. And I had more questions on de-risking, etc., especially on debt side for FPOs, but maybe I'll come back to that later. But moving to Stalin, Stalin, I mean, you heard a lot of what's discussed so far. From your perspective, as a, how do you see when you are supporting early stage climate ventures? What are the and the, I know there's a lot more focus on decarbonization, etc., that Green Earth is probably supporting right now. But when you look at food loss and waste innovations that are happening, what are the barriers that you see early stage innovators are facing in terms of accessing capital? How can we overcome them? Some advice, what you've seen when you are investing in some of these here.
Certainly. Thank you for having me here today. And this is certainly an important topic with a lot of people doing very, very important work. When we think about what is happening with climate ventures or ventures in the food loss and waste or even just more broadly ventures, the fundamental question really in terms of in terms of financing is really kind of understanding what your business is and what is the right type of capital and the type of capital that's really going to enable you to grow. And are there investors that meet that type of capital in the market? More often than not in food loss and waste, it's actually going to be impact capital as opposed to venture, debt capital, and others, because these are less extractive capital, if you will. And this is a market that doesn't have a lot of excess where extraction is really suitable. But my advice for entrepreneurs or venture builders in this space, regardless of their type, is really to kind of think about what is your business, what is the business model, how are you creating value across your own business, the customer you're servicing, and then whoever your potential investor is. And the reason that debt tends to be better suited in most cases is because with debt you pay back, and then you're done. And you can move on, you can recycle debt, you can take in more debt, but the amount that you're going to pay over time is limited. And the requirements of debt are not going to be that you have to have really kind of exponential growth and so forth. And so really understanding the right types of capital and happy to have conversations with anybody on this side so that we're not going too deep into the weeds for what doesn't matter. To the larger audience. I do think one of the things that's very important when thinking about this is really to understand who your customer is and how you're creating value for them and what the realities of their ability to receive financing or ability to purchase is. And we see this across the board. You may have a product that's going to create a lot of value. If they can't afford it, it's never going to work, right? And we've seen a number of instances where firms have produced technologies that have an 18-month payback period and can increase farmer income by double every year or triple every year if they have it. But if the farmer can't get a loan for it and can't pay for the loan once he has it, it's the only thing that offering this product does is create a sense of lack, which is not really important. And so I think the question then and the challenge for entrepreneurs in this space is to really step back and say, are there ways of rethinking your business model so that with the capital that's right for you, with the capital that's available to you, you can provide the right type of product offering. And if that means that you're providing to a customer who can't afford, maybe you can offer it in a service-based model where they pay over time as they're using or different things like this, which then means that you're the taker of the loan and whatnot. But that can be a way of aggregating that lowers risks and also makes it so that funders like NABARD or ADB are able to look at 1 point of credit risk as opposed to 300 or 3,000 points of credit risk. It's part of what the FPOs are doing, but there's a lot more ways that it can be done and aggregated, and so I really think that that's kind of the challenge to the entrepreneurs in the room, is to think about how to work within the systems and create value across the nodes of the value chain.
Thanks, Darlene. I think a very important point that you made on the value piece, right? How are we creating the right value so that that innovation gets sort of investments. And I think, Mr. Rautula, you were making a similar point when you were talking about while focus might be on reducing losses, there is also a larger value that gets, is there. And how we de-risk investments when we think about, if we know that the service model would be different depending on the innovations, how we customize and look at some of those aspects becomes critical, yeah.
Yeah, one last thing I would add is, especially when we think about like the philanthropic capital that comes into the market, my advice for innovators would really be to think about and treat that very much like you would think about it, equity, and look at how you can use that so that you become debt ready, and how can you start those conversations with debt providers early to understand what are their requirements so that they can start doing smaller scale pilots with you, whether that be that you're saying like, how many months of free cash flow do we need, or what is the debt coverage ratio, and some of these factors, which really kind of adds a little more value to a lot of the philanthropists who are looking to see that there's impact and the ability for their grant to create more impact. And it also creates more value for the debt funders who really need to see that there's a de-risking, before they put capital in, and then ideally over time so that they can add larger amounts of capital or reduce interest rates.
That's a very important point. I mean, that's the role of philanthropy in being catalytic, right? How do you de-risk investments or set up the right stage for innovators to grow in a way? And good segue to learn a bit more, Santosh, from you on the Sahyadri. Sahyadri has attracted a lot of impact investment by maintaining a farmer first model. So what are the financial strategies that have helped you build investor confidence, in the sector which is considered very high risk, right? I mean, high perishable commodities, and you've heard a lot of it even during this session and earlier in the day probably. So a bit more reflection from you on this.
Okay, sure. So just from the introduction perspective, just correcting some numbers in the introduction. So at Sahyadri Farms, we are connected to almost 30,000 farmers. Out of that 30,000 farmers, 22,000 farmers are shareholders to the Farmers Producer Company, covering almost 45,000 acres of land across 8 crop value chains. So agriculture is always high risk, and the question is relevant. We raised 2 equity round. While raising the equity, it was always questioned that in such a high risky manner, how Sahyadri or how anyone can work. Specifically when you're working in a horticulture crop, which is highly perishable crop. Our understanding and belief that unless and until we are having integrated ecosystem for each crop, sir has mentioned the reference of Amul, and we always say that what is a Sahyadri? We want to replicate what Amul has achieved in milk, we want to achieve in horticulture. Now, integrated ecosystem includes the pre-harvest and post-harvest interventions, right from finance to the productivity and the efficiency at the core level. Currently, we are having almost capacity to handle 5 lakh metric ton fruits and vegetables annually. While creating this multi-crop value chain, our approach was the same, that from the available resources, each farmer is having 2 acres, 3 acres land, how we can increase the efficient, or how we can use the efficient resource, how we can increase the income at the farm level, and at the same time on the post-harvest level. We at post-harvest grown almost at 40% CAGR since last 12 years, maintaining profitability on the pre-harvest and post-harvest on both level. The integrated approach support us to monitor what is happening on the back-end side. Once I'm having a control on the back-end side, we are able to take precise decision on the post-harvest side. And that obviously gave the confidence to investors who has participated in first round. But it was not always easy. For first 5 years, no bank was ready to finance as being a cooperative sector. First FMO DFI has supported in 2019, then other DFI has supported. For us, 3 core parameters. One is the farmer network. As we connected, we are monitoring on the post pre-harvest. Second is the intervention of the technology. when we are dealing with many multiple farmers dealing with small land, how to monitor the crop stages, how to monitor the climate challenges that is occurring at every stage of the crop. So intervention of the technology is the second. And third, based on the technology, based on the data point, how we are making decision to value addition of the farmer. On these three parameters, I think we raised around 700 crores as a equity and equal amount of 600 crore as a debt from DFI and domestic bank. Our approach is obviously to enhance the income to the farmers. That is a core objective for any collective organizations. But on the second side, how we can reduce the losses on the pre-harvest, on the post-harvest, and give affordable foods to the consumer. When we are talking to organic food, when we are talking to healthy food, it's always required that it should be affordable as well at the masses. And while providing affordable foods to the end consumer, unless and until we reduce the losses, we reduce the leakages at each point, generally we see as agriculture as like 10 heads of Ravan. There are many challenges. If we are trying to solve one problem, two problem, three problem, even we try to solve 9 problem and we are leaving back one problem for some other to solve, then it's a gamble, and actually that is happening. So the integrated approach is supporting to minimize the leakages at each point, and that's given the strength to the organization. That's our understanding.
Thank you. I think from the basic larger point was integrated approach, how we more data informed monitoring in terms with the farmer first model, how the technology itself is looked at, and the value addition that you were doing. All of those sort of keywords helped overall for getting the initial investments to build out this work further. No, that's great to know. I mean, and I also heard a lot of what the earlier speakers were talking about. Enhancing farmer income and livelihoods, more focus on, how in the external world, I mean, the farmers are the final customer and the user of this, right? So how they benefit most from it. That farmer first model is really helped. Nidhi, moving to you, as far as technologies has also been quite successful in scaling decentralized women-led model for reducing post-harvest losses. From the learnings that you've had, what financing mechanisms have been most effective in enabling scale for S4S, and what challenges remain, especially if you have to access the mainstream capital? Do you see any sort of challenges in that side? Yeah.
No, thanks for having me. Yes, when we started S4S, we wanted to reduce the post-harvest losses. The first bottleneck to scale was that who's going to invest the capital, which is who's going to put the infrastructure, who's going to put the assets. S4S was very small. We could not lend it out of our balance sheet. So definitely we're looking at if farmers can actually invest in the assets, so we can also scale, because we can, from our balance sheet, say only fund 200 say dehydrators or any post-harvest management equipment. What actually, and when we started the consumer group that we work with, which is women farmers, they're all new to credit. They don't have any collateral through which the bank will be able to provide the loan. And we were not able to scale beyond today. We work with 10,000 women. We could not scale. And we started first with microfinance funding. They came in, which was at 30%, because there was a market linkage involved. So the first unlocking of our success was that there is a market, which means that S4S can actually sell the produce that the farmers are making. For a farmer, the lens was always that they want to they look at it from a more economic perspective. That means they want to do some value addition, whether it is through preservation or processing, and get better value for their produce. So as sir was mentioning, there is a value loss that they see in lower grade produce, B and C grade produce, which would innately go waste. So they were looking at a more value addition, but they were not able to find market for it, and S4S was able to find a predictable market. So there was also first risk that the microfinance took, which was at 30%, but the farmers were not interested to work because the net income that they had was very less. It was not meaningful enough for them to carry out the work. Then we started working with NBFCs, so the rate of interest came down from 30% to 18%, which was also significantly high. because it's also there's seasonality in the business in terms of the produce would come only 6 months a year. So how are you going to repay the loan? Who's going to how are we going to service the loan for the other 6 months? And then eventually, when we were able to get very credible buyers like HUL, Nestle, or Marico coming in, very predictable cash flow stream we had. State Bank of India coming in, funding these assets at 9%, and then through Agri Infrastructure Fund leveraging 3% more. So the net cost of capital for the women is 6%. Today we have an institutional partnership with State Bank of India, and that is a big unlocking. That has been a critical partnership for us to unlock the scale at which we can work. So we almost process 100,000 tons of fruits and vegetables at a decentralized level, and also create almost 40 to 1 lakh rupee additional annual income for women. But the biggest learning for us was that who's going to do the capex investment, and though the intention of the banks is very high, there is also a big risk involved, which is that how are you able to repay the loan? And for a farmer who has worked as a farmer, suddenly it's also because there's a form that has changed. You today have to sell food ingredients. Accessing those markets is very difficult. They do not know the technicalities of it. But what helped us unlock this partnership with the bank was having different system players coming in. So one market, there's a off-taker who's present. There's also S4S who's managing the entire value chain in terms of taking the risk in terms of quality, reaching out to the farmers. If there is any farmer who does not want to be part of the ecosystem, we have an opportunity for them to exit. So just a systemic change for bringing out the different collaborators and driving this systemic change, it was extremely important and critical for our growth. So the biggest learning for us is that the end objective for everyone needs to be aligned, though it will be very different. For a bank, it is that they need their loan to be repaid. For an S4S, it's also making margin. For the farmer, is also having the income increase. And all of this is only possible if there are value chains where there is enough margin to be created because of operational efficiency, and not because of cutting down, or say an S4S eating up into a farmer's margin. So I think the biggest learning is that value chains where there is a potential for any value addition, which is significant, say a cold storage or something, we don't think it's very viable for a certain crops. So yes, that's been the biggest learning, that having very aligned.
Thanks. No, that's helpful, and I think it's also a journey with the investments that you got, right? You said starting from microfinance, then sort of looking at the NBFC route, getting debt finance, and eventually the partnership, especially with banks, etc., also got the right credibility for, eventually getting more capex funding, etc. Now, this is good learning. It's also in terms of the journey, I guess, the different innovation, goes through. Which brings me back to you, Starleen. I mean, from your perspective, how would you describe, as an investor, what you're hearing in your ecosystem, right? How do you describe the post-harvest loss and food loss faced landscape in terms of financing? Who are the major finance providers? What financial instruments that you see are being used? And if you don't see much happening, then, how do we sort of build some of that? So overall reflections on some of that.
So I think when we go outside of India, the story that we're hearing is a little bit different. And I think that there's some lessons or some threads that we can pull from that into India. When you look at the lending that is being done to banks and NBFC equivalent organizations within emerging markets, they have lower default rates than what you see in similar types of institutions in developed markets. When we look at within India and MFIs, they have lower default rates than what we see the folks in this room having within the banks, right? And yet we always assume that they're the high-risk people and that these are the high-risk business models. But the reality is if we're shaping the financial tools so that they're right, they're not, right? If we're creating business models that are not extractive, like the one that Nidhi was sharing, where it's adding value into the system, you're not going to have a scenario in which farmers can't pay back. You may have something where you need to say, hey, we have income these 6 months, so let's do it where we're paying more these 6 months and not, right? And I can definitively say I've worked with a couple of the Indian banks for their priority sector lending in the past, where we were able to structure certain types of tripartite agreements or agreements with differentiated term payments so that it could suit the markets that they were working in, right? And so the need there then is really twofold. One, are you talking to the right people within the different organizations, right? So you don't want to go to the guy who's doing local lending if you want to have a conversation about, can we change the way that we're thinking about payment terms? You really have to go to the head of priority sector lending. The second piece is we often talk about how there's this need for storytelling. And when you're talking to impact investors or even equity investors, that's absolutely true, because we're buying into what the dream could be and the money that could be, because we have to give money back. But debt providers also have to give money back. And so my take is, don't try to storytell to the bankers. We use language when we're talking to the bankers. And the language that we need to be thinking about or talking in is really talking about the types of cash flows that they can get, talking about how there's a de-risking, talking about how even though there's the assumption that these people, because they don't have a credit score, are so high risk, they're not necessarily, and coming in with the data around how MFIs have lower default rates and the data around how emerging market banks and emerging market NBFCs have lower default rates, because then you're able to speak to the concerns that that person has, right? If a banker isn't able to get loans returned, he doesn't have a job very long. And so you can tell him a story about how you're going to save the world with your innovation or your technology or your business model. If he can't get his money back, he doesn't have a job, so he's not doing it, right? So across the board, we need to understand how we're talking to the people that we're speaking to about finance. And I think that really kind of gets into, some of the things that I think could be catalytic in terms of shifting some of the conversations. And certainly there are a handful of models where venture capital is potentially the right funding. I would love to see venture funding, for example, debt providers who are willing to look at this and say, we know that the risk isn't where it is. Let's set up and do experiments. And maybe that's something NABARD and ADB could do together, where you really say, like, let's run small experiments so that Santosh and Nidhi, when they're trying things out, have a little bit of room to play and see if this can work better. But I think that, that's how we start looking at how to unlock the market.
Thanks, Stalin. I think very important. Sometimes comparison, if they, lesser default rates that we may have in India, if we compare, as you said, to emerging markets and others, good story, but how we tell it and to who is also sort of critical. And the other point I think that you made on, of course, we need, in the earlier session in the morning also this came up that, when we're thinking about scaling, there is a lot more need for piloting and demonstrating that the solution works. Similarly, also more piloting and demonstration on different models, financial models or that could work. So that's also needed to scale up, and that's where, potentially ADB, NABARD and others, how we scale up, which brings me, Mr. Rautela, to my next question. There's a lot of lessons, in the magnet project in Maharashtra, right? So from your perspective, how can the learning from Maharashtra be scaled up to other states or a national program to unlock financing at scale? Just what are the learnings? What do you think can be done at a subnational level? If someone else wants to build a similar program, or ADB wants to do itself as well, yeah.
So, the good news is that the Maharashtra government itself is going for additional financing, which is more than double of the current financing. So that itself shows that they are also scaling it up. What we have shown with the first set of project is that it is possible to have the FI windows open. It is possible to have dedicated products. Only thing is that our sector is still dealing with the legacy issues where, if you look at the FPO components, are the farmers only. And farmers do have certain credit history which comes in the way of even FPO also getting the right credit perception in a way, right? The risk is also perception issues, not the risk is the actual risk. And de-risking requires that you open the eyes with S4S or Sayadri, such examples. So I think with this cohorts of, let's say, 77 on one side, 122 on the other side, you have good enough number of examples, and which are, again, I'll say piloting, but piloting, we have to go beyond that now. At a scale, you have to really start doing this, then only people will believe. Otherwise, one or two will happen, and then they might die down also to other risks which happen. So overall, in Maharashtra, we've been able to demonstrate, and the government has scaled up. Now, only thing is that how central government or how other state governments will do that is for them to understand this model as to I've been to UP and they said, why should I take money and give it to FI? They're not able to understand as to where's the value in this. So for example, in all other public sector projects also, like MOFP or others, you give one-time grant, right? But after that, that money is gone. It may be 90% utilized or maybe 90% wasted. But if in this case, you are creating a kitty in that FI component, which keeps on rolling, keeps on adding more catalytic value, but at the same time, it will also create the investment mindset, which is like typically SBI in this case. SBI has changed their mind. We need to create more such systems where every bank starts looking at farmers and FPOs as a market. They should be the lowest hanging fruit for him rather than housing loan or car loan, and they should say that this is what I can finance. And that means they should understand the business better. That's why the value chain approach, very clearly showing which value chains are having the right systems in the country, where from production till marketing, we are able to get value for everyone. So that's the value chain approach we're thinking overall. I think that's where we are looking at different governments. They're interested, but for them to understand and roll out will take time.
Thank you. Very helpful. Good to know that the Magnet 2.0 is coming up. Yes, please.
So also on the NABARD ADB, this has been mentioned. So with NABARD, we have been collaborating as a, may not know, but we have been working for last 2-3 years where we can get the climate change adaptation financing to the country more. If you really look at the whole climate change financing scenario, very little comes to agriculture, very little goes to adaptation. So this is something which we've been working. So Gates Foundation, us and NABARD have been trying to see as to how we can create pipeline of projects and also create a window where this issue, because in the agriculture sector, even our own private sector lending operations doesn't find enough clients to fund because they're working at a certain high level of funding, like more than $100 million, where a requirement maybe is like $1 million, $2 million. So if we can create a window where we are able to bring the financing to private sector who are working with farmers, probably we'll be able to make much of a difference. So today only I was discussing internally as to how we can do that. So maybe that's one approach where both DFIs can come together.
Very important. I mean, I think one is, of course, learnings at the national level, as you said, but if we are thinking about scaling up, then the larger point you made, I mean, pilots may not be that, we need to move beyond piloting to scaling, essentially, and that's where how we sort of look at it more systematically, invest in more bankable projects in some way, right? That's where the financing is essentially going with farmer producer organizations, de-risking some of those investments. Very good learnings, and we'd love to see and collaborate and see how some of that work also kind of moves forward. Dr. Vadivil, I mean, just picking from here, from NABARD's perspective, what financing challenges have agro-processing unit typically faced when trying to access finance? And sort of a second question on that is, what measures are already in place to improve access to credit for MSMEs, including FPOs in the food processing sector? So if you could talk a little bit more about some of that and any reflections on what Mr. Rautela was saying earlier as well.
Yeah, okay. Now the thing is, any intervention, suppose if we have to reduce the post-harvest loss, it requires the public as well as private sector participation for doing this. When it is a private sector participation, the capital is the huge requirement, isn't it? Now the promoter have to bring in margin, and bringing margin to the tune of 15-25% itself is a cumbersome task for them. So when what an entrepreneur or what a promoter want exactly is, they want an adequate credit, right quantum of credit they want, and they want an affordable credit, which means the rate of interest has to be an affordable, and at the right time the credit is to be provided. So these three basic tenets which any entrepreneur would like to have it. Now, when we have to move into what sort of measures which we have to have is, always there has to be a blended finance, in the sense neither the only equity will not work, only subsidy will not work, or only an intervention will not work, only guarantee will not work. So there has to be a blended mechanism, in the sense there has to be a subsidy plus intervention plus credit guarantee. Because why this mechanism is important is, especially this is important in respect of risky sectors. For example, even FPOs. My friend was saying they did not get a loan for almost 2 to 3 years at the starting stage, because FPOs are considered to be or perceived to be highly risky. This is still it is there. Okay, let us be open on it. But during such stage, we need to help them. Now, over a period of time, this has also evolved. For example, in case of FPOs, and critical issue is a number of shareholders. The shareholders, still it is 200 or 300, it is not moving. Even if the share capital contribution, if it is 500 or 1000 per member, the share capital or a part of net worth is very less. When an FPO goes to a bank for a loan, usually the loan is provided in terms of maybe multiple times of net worth, maybe 5 times of net worth, or 10 times of net worth, or 20 times of net worth. So when I am not having an adequate share capital itself, then leveraging the loan becomes difficult. When leveraging the loan becomes difficult, then entire business operations or activity gets stalled. Okay, now a bank thinking that now I have financed an FPO, there is a chance of default. So somebody has to come in and say that. So what happened is, in case of a 10,000 FPO scheme, Government of India's 10,000 FPO schemes, these three issues have been addressed. First thing is, okay, equity is not coming forth. So what happens is, I am providing an equity grant support. Per farmer, 2,000 rupees equity grant, and subject to a maximum of 15 lakh. So to an equal contribution of equity will build up the net worth, and accordingly the FPO would be in a position to leverage the loan. And the second thing is the guarantee part of it. In that scheme itself, the FPO loans up to rupees 2 crore are guaranteed, and our subsidiary NAPS and Rakshan is managing this credit guarantee. So if we see, when we see the credit guarantee applications which you have come in, and we can comfortably say that the risk perception of the banks have come down. Okay. They started financing the FPOs. One more issue is when the FPO is formed, at what stage I will finance? Suppose 2 to 3 years if somebody waits, why they are waiting. So I will have a comfortable situation that if they have a business for 3 years and they have an audited balance sheet for 3 years, so I know how better they are in. So I wait for that. Whether this is okay. Okay. So what happened is, we have a subsidiary also called NAP Kisan, and we broke this. We want to be an enabler for this. We have classified this farmer producer organizations into 3 types. One is startup FPOs. Second is matured FPOs. And third is a high potential FPOs. Even if an FPO is formed and within 6 months also, they would be in a position to get credit, because initial push is required. Because every FPO have not come to a stage like Sayadri. Okay. FPOs, each FPO has a different issue. So one size fits all approach cannot happen in case of FPOs. Each FPO is unique, and each FPO have a different issue to be addressed. Therefore, it is highly context specific. So NAP Kisan, now they categorize as FPOs and provide even in the 6 month stage. Now almost 4,100 FPOs we have provided either term loan or working capital assistance. So the rate also, we tried to make it affordable to the FPOs. Somewhere it is around 11.5 or 12% like this. Okay. Yeah. This is how we want to make this FPO as an enabler in case of reduction of post-harvest losses. This collateral is also one of the issues. When we compare what is a MSME, what are the issues which are faced by MSME. When an MSME faces an issue, FPO also will have the same issue. So lack of collateral is an issue. So lack of collateral in majority of the government guarantee, in majority of the guarantee schemes of Government of India, they say that collateral-free loans will be provided guarantee, which means that aspect is also looked into. You don't ask for collaterals because they will not be in a position to provide collaterals. Okay. For that only I am providing a guarantee. So such enablers are in place and it is taking up and it will take a good shape.
Thanks, Dr. Vadivel. Thanks for sharing that. Yeah, I mean, it's changing, but it's changing slowly how FPOs were considered high risk, but some of the financing options, that are now being sort of undertaken just to kind of help FPO space grow. So there are the incentives, etc., with NAPKISAN and others that NABARD is also looking at very closely. Looking at time, and we're hoping to close, and not too late. I'll actually now move to Santosh. Going back to the Sahyadri experience, there's a lot of investment in cold chain and processing infrastructure, which directly impacts food loss reduction, and financing gaps we know still exist in this for from a FPO perspective if you want to replicate this. What do you think are the learnings if this your model needs to be replicated with FPOs at scale? Where do you see the challenges or risk in that?
Okay. Two part of the question. First, about the infrastructure for post-harvest processing. We are dealing into horticulture, which is highly perishable. Sir initially mentioned that milk is having minimum wastage or minimum losses. If we compare foods and fruits versus the milk is highly perishable than fruits. Still, milk is having a minimum wastages. The simple reason is that as a farmer, when I am selling a milk, I am not selling milk for the fresh customer differently and for processed customer differently. There are ecosystems like Amul, in even private sector as well, that as a farmer I am selling entire milk to the one person. That person is taking care for all category of the foods. That can be of fresh milk, processed milk, and even like dried powder and other units. So same approach need to have into the food and fruits and vegetables as well. That as a farmer, when these growing, as a post-harvest infrastructure, I should have an end-to-end solution for his entire crop. So for example, at Sahyadri, we are exporting a quality of the product or the product which are suitable to the export markets. When there is extra productions, we are selling in domestic market through a tech platform. We are having B2B e-commerce platform to selling farmers produce to across India. And when there is a glut situation, we are taking entire that fruits and vegetable for the processing. So as a farmer, there is a one-point solution. As a post-harvest infrastructure, we are providing each kind of the supports. So we are trying to match fruits and vegetable sector as the milk industry, that how we can reduce the losses and increase the value. Now after even the processing, there are some wastages. Wastages means the wastage we cannot convert into the fruits. For example, I'm extracting mango pulp. There are wastages like stones and peel. I'm extracting juice from the citrus. There are pommes and peels. What we can do with that? So we have gone ahead. We have invested into the facilities like the bioactive extraction from peels of the processed products, pommes. We are gone ahead, we are converting entire effluents, fruit effluents into the microalgae, and that microalgae is further going for as a biostimulant to the farmer. The circular economy function is working. So while creating infrastructure, we are not focused just on the cold storages and cold chain. We are focused on how actually we can give the maximum value to the farmer and at the affordable price to the consumer. So we have invested almost since last 2014 to 2025, we are investment almost 900 crores into infrastructure. Now your second question that the challenges or the how it can be replicated to the other farmers producer company. Actually, everyone is talking about the FPCs, but my thought is that it's about the business model. What business model is it creating? Unfortunately, with FPCs, we are having legacy of 100 years of cooperative sectors. There are numerous good examples of the cooperative sector, but equally bad example also for the cooperative sector. During lunchtime, I was discussing one of the gentlemen sitting in audience. His first question that if people are coming together, there is a political interest. And everyone looks agriculture as a political soft points as well. So if people are coming with the professional mindset, I think that's a challenge. My first point was that the bank didn't finance for Sahyadri for 2 to 3 years initially. It was not the net worth issue, it was not, and that time in 2011, FPC was not known to many of bankers as well. So banks was like curious that how cooperative sector can work into the horticulture. One guy from a very small private sector bank studied in Irma University, having the background of the Amol. He visited Sahyadri one day in 2015, and he realized that there is a potential for the processing business, and that's how our journey for the financing started, with that one person who know the understanding. Now other FPCs, as like many FPCs are working in some agri input, someone working in say front end side, someone working in commodities. So the challenge is that finance is not the issue. NABARD, ADB, and many other banks, even private sector banks are ready to finance because it's their business to finance and get the interest. But the risk, how we can reduce the risk to the bank, that is challenge. Solutions like CPOC and other on the back end side, they are trying to reduce the risk to the finance. And we at Sahyadri integrating all those dots and trying to reduce the risk to the finance. If you work, I think, if you're working in that particular silo, sorry, last point, I know it's a time, but many of FPCs, you mentioned 10,000, it's almost 32,000 FPCs across India. Most of the FPCs are also supported by NABARD, supported by NGOs, supported by government funds. So they are missing the core business I think, ideas and problems, and that's why banks are struggling to finance. My closing remarks on FPO, as we discussed a lot, that what is the go-ahead FPC or the collective approach is going to a problem solutions for entire food category. Unless or with the intention that we are creating a professional FPOs, banks obviously will finance, and finance capital will flow to the agriculture.
Thank you. I think two takeaways for me was, one was within the sort of Sahyadri's innovation, how you looked at technology, infrastructure, processing, but also from a circularity perspective within the solutioning part. And the second is on for replication of some of these models, the importance of having the right business model and de-risking some of those investments, whether we are looking at, from a farmer producer organization perspective or company's perspective as well, becomes critical. Moving to Nidhi, I mean, just, how can decentralized processing models like, what S4S has done be really integrated into mainstream supply chain innovations to reduce food loss and waste? And what role could financial institutions play in enabling this integration? So how do we essentially scale up?
I think the first thing I would like to say is that the importance of technology and value chain mapping is really important. Say dehydration might not be the best technology for fruits, but there would be other, say the solution by green pods, Deepak is here in the room, we would know that there are so many solutions that are very fit for say a banana or a guava. So it's not one size fits all. Also, it's also a geography and a cluster challenge where you have surplus, you have more wastage that's happening, so creating infrastructure or technology for that. So I think the first thing that I would like to summarize is that, and one person would not know all the different technologies available. So the intervention or the lens through which an entrepreneur like me would want to solve or scale is first to understand the different technologies available and pick and choose where to play, basically which technologies to focus on and which crop and value chains to focus on, and then map it with the market that is available. So start with the market, what is the market size for each of these, and then decide whether it's a large enough market, there is the right technology available, do we also have the right know-how to execute it. I think that's the first part. I think the second thing where my ask to any financial institution would be that in grains there is a warehouse receipt financing model available, which is widely proven. We have a commodity market. It is also traded, digitized and traded. We can replicate such kind of models in a perishable commodity by processing or adding some value, because for banks, the market is not discoverable. They don't know where to sell it. There are not enough number of buyers. There's not an organized platform through which they can fund the working capital, which is a big bottleneck for scale. The reason why today you would not see a lot of farmers also taking up, say, storage of potato versus storage of watermelon. Apart from market volatility is also availability of working capital. If they want to export it at the right time, do they have that option? Do they have that choice? So I think that would be my second closing remark, which is finding not maybe WRF as a model, but other type of financing models that can help farmers also take that risk, access premium markets, get that working capital capability also built in. Thank you.
Focus on technology and value chain in an integrated manner, and how we sort of look at getting farmers access to patient capital, working capital, especially FPOs, FPCs, is one of the critical ways if we want to think about scaling. A lot more eyes on investors like you eventually, Stalin, for how this kind of goes forward. Of course, institutionally, then role of ADB and NABARD sort of becomes critical as well. Swati, if I can turn back to you, you heard a lot of conversations today. So philanthropy, and this I think came up initially in the discussion as well, that philanthropy can play really a catalytic role for systems change. How can we encourage funders to support more on food loss and waste as a climate nutrition equity issue, and not just a supply chain problem? Any thoughts and last closing remarks on this? Sorry, just 1 second. We can't hear you very well, Swati.
Can't hear me?
Now we can. Please go ahead. Please go ahead.
Okay. No, I'm just saying that this has been an incredibly insightful panel, Ruchika, and so glad to hear about the different ways and ideas which have started to emerge on this panel. I think I would maybe, just thinking about that entire systems view, maybe zoom out a little bit more from a business operations alone to also looking at do we even have a conducive environment to support those businesses, right? And I think both will have to go hand in hand. So one, I totally agree, and I think there is a critical interests emerging within the philanthropic ecosystem as well to explore opportunities around blended finance, to move forward in spaces which really deliver value for the people and for the planet. And what does it even mean? Blended finance can come in different shapes, sizes, and forms, and really understanding in the context of food loss and waste, what would it mean in terms of creating that pipeline of ideas? So that, I would say, is really on the de-risking and particular operation side of it. But I think, just from the perspective of business sustainability in the longer run as well, right? As we look at maybe 10, 20, 30 years down the line, it's also about how do we support a conducive environment to have, the right policies in there, to have the right engagements with the large agribusinesses, et cetera, to create that market for new innovations to survive as well in this space. So, I mean, just going back to drawing a parallel, maybe it's not a right parallel, but maybe something to do with how the electric mobility sort of space in India flourished, right? I mean, it was just not alone an innovation on the technology side, but it was also to do with how policy pushed for it, across different states in India, how, public mindset started to shift around, being able to use electric vehicles, etc. Right? So there are a lot of, I would say, different pieces when we start looking at the systems together and zooming it out from maybe a specific business alone, because there are so many different factors that need to work together to actually help that business survive and be, sustainable in the longer run. So I would say just keeping maybe view on both, and this is where philanthropy can play a major role, right? I mean, looking at how do we support organizations who are not just bringing the innovations forward, but also working in a space that's creating or that's helping to work together with the governments or helping to work together with the private sector players to create the right kind of environment for food loss and waste to be tackled effectively in India. I mean, just going back and saying, if it is more cheaper for us to dispose of than to reduce food losses and food wastage, it really doesn't make a very articulate business case for for an accelerated market in this space. So again, I think it also goes back largely to a mindset as well, where maybe it's not a if it is not a space for many other different players to act, but particularly the commercial players, but philanthropy can have a major role to come in in that space as well. And the last bit, I think, while we heard a lot about the post-harvest losses and particularly tailoring more towards the losses part of it, but also, keeping view of the future and looking at where the next hotspots in the entire value chain of food loss and food waste may emerge. I mean, I think it goes back to one of the studies of WRI wherein you look at, there is at least going to be 10% growth in wastages from supermarkets or retail players, right? So what does it even mean to start exploring new innovations in that space? And I don't think we have yet come to tackle that sector.
Thanks, Swati. Really helpful. I think the catalytic role that philanthropy can play is important when we think about the enabling ecosystem that needs to be created in terms of the policy levers, which are critical and for this to work, which philanthropy can then support. How do we make that larger business case? And of course, I think philanthropy can also support in where we see the next hotspots are. And this, and some of this, our initial analysis on this, what we also know that, well, currently the organized sector, almost 93% of the sector is unorganized in India from a food supply chain perspective, right? We know that will grow. There's a lot of investments that are already growing, which also means hotspots on some of this will eventually increase. So if we can do it right, becomes very critical from a larger perspective. So I think you've all been a fantastic audience, patiently listening to a very important topic and with a lot of complexities. Ms. Nitya, can I pass it back to you?
Since Swati has to leave, so thank you to all our panelists for such an insightful discussion. So before we close, may I request all of you to please come together in the front for a quick photograph. So here we come to the end of our event today. After all discussions on food loss and waste and the sectors that we have covered over the 2 days. Thank you so much for joining us for over the 2 days, and I would like to now pass back to my colleague Rituja for the closing remarks.
Thank you, Nitya. Thank you, everyone. With this, we close our first year of Reset Dialogues to Reduce Food Loss and Waste Actions and Ideas. Look forward to having you with us next year with much more insightful sessions planned. Thank you once again for joining us. We will be working on an outcome report and sharing that with all of you as soon as that's done. Thank you.